Hey, good evening traders. It's 8:49 here in the UK. Looking forward to some opportunities after the FOMC meeting minutes. Forgive the croaky voice. We've been laid under with a little bit of man flu, but we're back and we're ready to roll and hopefully bring you some pips. Anyone that's been watching our videos over recent weeks will have hopefully grabbed a bunch of pips, and if you have, please hit a like, hit a thumbs up, let us know that you've banked those pips, and let us know what trades you took, because we have absolutely smashed the markets recently, and I hope you've joined it with us. So let's start with the dollar index. If we just head out to the weekly time frame, we saw the markets push up right up into the 105s. We broke this previous high back here in January 2017, and we did call it a potential warning sign as price was pushing up. Is it going to be a false break, and are we going to pull back lower, and if so, where to? Well, the correction's in play. We've had now what is one down week, closed below the previous week, and as this current week unfolds, it is presently another down week, but yet we've still got Thursday and Friday to attend. So are buyers going to show up, or are we going to continue to see a little bit of a correction here in the US dollar? Before I want to start buying the US dollar again, I did want to see a correction. It was just too far gone in my opinion. I'd much rather be looking for trading the correction here, or looking for some dollar weakness, i.e. trading the dollar back down, which would mean looking to trade euro long, pound long, Aussie long, Kiwi long, CAD long. Well, I was going to say yen long, but no, I'm avoiding yen right now. So ultimately, they were the markets that we wanted to be buying, and then it's what would we sell it against? Well, because the dollar is overcooked, it was against the US dollar. So we go back to when the euro was testing 104s, 103.70. We called the bottom of this descending channel. We took an early trade in here, and we also took a break and retest at this level here, and then we said watch out for a break of 106. So, you know, in real terms, you've had best part of 350 points in this move up here. You'd have had around 200 and something in the second move, and around 110, 120 there. So combined, if you'd have taken some, scaled out, taken again, scaled out, taken again, scaled out, you should have had a bucket load of pips on this market. Question is what to look for now. So I think based on what we've seen with the dollar index and the way this daily candle's potentially closing, I would like to see the euro pull back into 106 to look for the next long opportunity. That's if the daily closes anything like it does now. If we drop down the time frame, we'll see that the low has been broken on the 4 hour. And what do we mean by that? Well, if we look at the previous swing low, I'm just going to mark it on right now, that's here. We now have a lower low on the 4 hour chart. So how do we mark out what's potentially going to happen? Well, if the trend's going to continue, it's got to break this high here, and this was just basically a move that the markets are random, we can't predict. Yes, we have a lower low in the marketplace, but we don't have a lower high, so my precedent still lies with the short-term trend continuing higher and moving into this point. So I'm looking for long opportunities, providing I can see confluence on the lower time frames. So if we go to the 1 hour chart, what do I want to see? I want to see if the market shows us that this movement down is potentially reversing and starting to go back long again. So we need to zoom into this little section here by going down the time frames yet again. So let's have a look on the 30-minute and see what we see. And pretty much that is exactly what we can see. However, the type of movement that we're seeing is more of a corrective movement in my opinion. And when I'm referring to a corrective movement, it's not exactly impulsive where we can see big amount of buyers coming in, then a correction, and then a big impulsive amount of buyers. So I'm looking at this and thinking that the next movement we might see will be kind of some kind of flag or corrective channel movement, and then we can see that push back down into 106. So that's my preference, and if that happens, I'll happily look for shorting opportunities on a small time frame, looking to take some pips down into 106. However, if we do break higher and we see some more resurgence of buyers, then fantastic, I'll look for long opportunities. But the way this current structure is playing out, I think we might see a little bit of a corrective move on the euro back towards 106. Let's take a look at cable. So you'll see that we had some nice opportunities that's doing quite well right now. We've had several trades on cable, one down at 122, this end of day buy, which was called on one of our YouTube videos. We also looked at a break of the trend line, and we also looked at a break of 125 and a retest, which we got perfectly today and yesterday. So a couple of things to watch out for, and where could we go. So let's just jump up to the weekly time frame and just roll the screens back and start to break down into a little bit more detail and see what we could be looking at longer term. So for those of you that like to trade but do it more as an investment rather than, let's say, a day-to-day income strategy, you know, sitting down here and buying cable at 122 and then just setting and forgetting and looking for it to potentially run up to 135s, 140s, that's a pretty simple sort of strategy that you'd be looking to take advantage of, and along the way starting to scale out, especially mid-cycle around 132. You can see where structure here, and looking through the left, all this price point where the market has found some kind of resistance and then sellers come into the market. So it's probably going to happen again when price comes up into this area here. But as it stands right now, we have a significant amount of buyers coming in. We also looked at this because of the way the commercials are positioning themselves. Now, for those of you that don't know what commercials are in terms of when we refer to it in the trading world, this is basically a corporation or best way to describe it as a corporation that uses the marketplace to facilitate business transactions. They don't use the marketplace to make money. So for example, if you have a corporation and your business is based in the US, or you have holdings of US dollars, but yet you also have operations in the UK, and you have to pay UK labour, you have to pay UK insurance, you have to pay UK rates, you name it, all of the costs that go with working an operation in the UK, and you have a big holding in US dollars, and you see that just back in May 2021 it was at 142. So for every £1 you're getting $1.42. Now as price drops, as the pound gets weaker and you own this company, your accountants, your planners are going to be buying more and more pounds with the dollars that they have in surplus. And the reason for that is that means their operational costs in the UK become cheaper. They can't increase their prices, but what it does do, it locks in more profit in their bottom line because they've made their operational costs cheaper. And then the cheaper and cheaper it gets, more organizations, more institutions buy more and more pounds, to the point where the commercials are buying that many pounds that they outweigh the market, and it creates a bottom. We get this information, this is called the COT report. It looks at the futures markets, and this is what I showed you on a previous webinar. If you want to know more about the COT report and how I interpret this data, drop a comment or email mark@tradeandtrain.com. So we're expecting more upside on GBP. And remember, GBP is referring to the futures price, so that would mean looking at all GBP markets and looking for the best technical setups. So as it stands right now, we're looking for more upside on GBPUSD. If we break it down and we start looking at the smaller time frames, we've got a nice structure point here around 126 that we want to see the market break through. So let's drop down to the 4-hour chart. We can see that the market has moved nicely today off 125, but we have a minor resistance level over the last couple of days that has formed through this 126 area. So tomorrow this is going to be a perfect place to take advantage of a break and retest. Or if you have a different way of entering the market, then obviously that comes down to your trading rules. So we're long-term or mid-term buyers of pound and against multiple markets, and we've got lots of markets that we're interested in at the minute. And for that very same reason, we're also interested in Kiwi. Now, if you don't follow the news, early hours of this morning at 3 a.m, the RBNZ, that's the Bank of New Zealand, they increased interest rates by 50 basis points. Now, hopefully everyone that watched our videos will have noticed that when we called this level down here at 62.50, it was a major support level. It was also a 61.8% retracement of the entire move from the low of the pandemic up to the highs, which we can't see right now, right up there. And this was a 61.8% retracement. Then we have a corrective formation in play, a descending wedge. So when we combine all this, we were looking for opportunities. We traded the break of this level here. We didn't trade the retest. We were long from this level here. We hit our first take profits. The market came back down to our entry price, and then it's carried on and it's moving rather nice. So those of you that took that, fantastic, well done. This isn't our final target, by the way, but this is the one where we'll take most of our position off, and then we'll look for any further retracement to get long. We do expect this to potentially push quite a bit higher, but as you can see, we've got a nice structural point through here that the market could potentially run into to pull back to form a higher low before we go again. So that's what we're going to look for. Now, don't be surprised with Kiwi though. Sometimes Kiwi, it just moves. It doesn't really have strong pullbacks. You can see here, shallow pullback, shallow pullback, shallow. That's probably the deepest pullback it has before it continues its resurgence higher. So obviously, you can tell by my voice, I'm trying to keep this video as quick and as short as possible, but whilst giving you some decent content. So that's going to be my 3 charts for the night. If you've got any charts that you want us to look at tomorrow, please drop that in the comments section below. And if there's anything that you would like us to run over, any sort of type of technical education, whether it's a strategy, you want us to have a look at something, please put that in the comments below and we'll happily look at that for you. If you have enjoyed tonight's content, please give it a thumbs up. Don't forget to subscribe so that you get all the latest videos as they're published straight to your inbox, and we look forward to seeing you tomorrow. Bye bye guys.